Good evening, everyone, from Chicago. This is CB3 Live on today's markets. I'm your host, Charles Brown. This is Thursday, April 16th, and this is episode 6. We are thrilled to have you with us. What a day it has been in the way of news and developments. In fact, some of this is so new that I'm literally going to have to read it off my screen directly from whitehouse.gov. So hang on tight. It's going to be a wild ride tonight for sure. And on my other side, I have an incredible chart to share with you that I can scarcely believe myself. So this is going to just be a wonderful, exciting time, I think, because so much good is happening right now. As I've done in the past, I'm going to wait for just a couple minutes to allow people to log on. I'm going to publish my first poll, so you guys that are out there can answer this if you'd like. Now, we've also added the rewind feature. So if you log on late, you can actually rewind the program to the beginning so you don't miss anything. That's fine. Just be aware that if you are lagging by 5 to 7 minutes, then if you submit a question at the end of the evening, I won't be here to get it. Okay? So what I'm going to encourage you to do is not just log on, but to sign in and say hi. Let us know you're here. All right. Again, we've got a lot of information. So I'm seeing the poll is already starting to be filled out. So please do this. And that's good. We've got some answers. Wonderful. I just can't tell you how much is going on here, folks. That's why we're doing these every week. There's just so much to try to take in. I mean, literally in this afternoon's press conference, which only ended 20 minutes before this live broadcast, I was trying to assemble as much information as I could for you, but we've got to get America back to work. I mean, we just have to get America back to work. And I'm excited to say that our president has the same idea, and we're going to be sharing some of that with you tonight. So give the poll about another 15, 20 seconds, and then I'm going to close that one and open the next one. For those of you that might be logging on for the first time, we have a bunch of new visitors last time, and I'm expecting a lot of new ones this time. This program is a weekly program talking about moving back towards prosperity. We have been through hell and back, literally, in the last 2 months. In fact, less than 2 months. And it's talking about getting back to prosperity in the markets in a post-pandemic world. And what I've said every time when I open these programs is that adversity is inevitable. Misery is a choice. Adversity is inevitable. Misery is a choice. And we are choosing at CB3 Financial Group to not be miserable. And in fact, we're going to focus on the positives while recognizing that this is a highly unusual time. So the health of other Americans wins it at 83%. That's good. There are your results. Good for you guys. Glad you're worried about your fellow Americans. That's wonderful. Let me put the second poll up here. When do you think that life will return to normal? Again, we're filling out these polls. We're waiting on people to sign in. Hey, Thomas from Wisconsin, great to see you. Chris from Wheaton, great to see you. What do you guys think? When are we going to get back to normal? April to June, in other words, from now till June, second quarter, third quarter, July to September, fourth quarter, Octodece, or sometime in 2021? There's a lot of opinions on this. Obviously, they can't all be right, but it's going to be in stages. This is the first time in the history of the human race where we have been laying around in front of televisions doing nothing, and we've been encouraged to do that. Let's see if we can not screw that up. How about that, guys? Wow, crazy times. We are quarantined here in Illinois, as you probably are wherever you are located. And it was my turn to take out the garbage, so I thought to myself, gosh, what should I wear? It's the first time I've been out of my condo in 5 days. How should I dress? And then another guy said to me, you know what, my problem, Charlie, is that I need to practice social distancing from my refrigerator. And yeah, I get that. I get that for sure. All right, we've got, let's see who's winning this, the 43% for the July to September range. Yeah, and I think that's accurate. I'm not voting, but that's what I would expect as well. So there you go, guys. There are your results. Let's move forward here because we've got a lot to cover tonight, a lot to cover. As you know, from the past few weeks, we break this down into 4 groups: Corona America, the U.S. economy, CB3 account holdings, and investment ideas that we're working on. Folks, we are in a medical crisis that has caused an economic crisis, which could have become a financial crisis were it not for many, many leaders in many industries that have stepped in to prevent this from happening. We have a lot clearer picture on that now this week than we did 6 weeks ago when we started this. In the U.S., COVID-19 has peaked on April 10th. This is the 16th. That means just last Friday, it looks like the peak of the pandemic. In this time frame, 3.5 million people have been tested now in the U.S. from 0 2 months ago to 3.5 million. I guarantee you that will be faster the next time if we ever have this kind of epidemic again. It will not take this long to get that many people tested. So the peak, as I said, April 10th, we've dropped off from 35,000 new cases a day down to about 24,000, which is a great number. Now, some countries around the world are actually extending their lockdown periods. The UK says it's too early. France is going to May 11. Canada says all non-essential businesses will be shut for at least 28 more days. Australia, everything's locked down for another 4 weeks. Saudi Arabia is indefinitely locking down, and you can't even make a pilgrimage to the holy city of Mecca. But there are some countries that are easing, and I take this as a big positive, a real big positive. Spain eased their conditions. Austria and Belgium announced they'll allow small retailers to open up, and supply stores, gardening supply stores, so people can go out and start their gardens, as long as they're wearing masks and practicing social distancing. Italy has lifted 2 categories of prohibitions, so children's clothing, salons, hair salons, and Germany is going to allow the opening of non-essential shops if they take hygiene precautions and their square footage is 8,600 feet or less. So why am I giving you the specificity on this? Because what we're seeing change here is they call it a light switch or the dimmer switch coming on in various parts of the world. And the same thing is going to happen here in America. Just earlier today, there was a guideline published here, all vulnerable sheltering in place. So if you're vulnerable, you've got a temperature, you have a possible risk, you're still in place, you're not going anywhere. Still continue social distancing in public and avoiding groups of 10 or more. Minimize, not eliminate, but minimize non-essential travel and return to work in phases. Now, I don't want to look off camera here, but I don't have any choice because literally these next guidelines have just been published an hour and a half ago, and next Thursday's episode will have a more detailed view on this because this is what the White House is proposing. Obviously, big corporate America, small corporate America, and certainly the governors and to some extent the mayors are going to have to weigh in on this, but it's a phased approach based on symptoms, cases, and hospital availability, testing and contraction tracing. In other words, they have to be able to trace this in your particular area, what the healthcare system capacity is. So this is a lot of moving parts going into determining when phase 1 begins. And there is a phase 1 for employers and for individuals. And I'm not going to go through each of the bullet points because candidly, this is just a recommendation. By next Thursday night, I'm sure I'll have a lot bigger idea on what this means. But if certain satisfied conditions are met, then phase 1 can be implemented for employers and employees. In phase 2, they have to pass 3 steps of approval for that. So it's good. It's good. And layer 3 here, phase 3 has to be showing no evidence of a rebound a third time or a third testing period. So again, just right off the news right now. And so I'll have more for you on next Thursday on that. I'm looking at a map of the penetration of this virus in America. And it actually, again, I just saw this about I don't know, 3 hours ago, and I got a screen snap right from the press conference. There's a ton of green in these United States. There are two areas that are black, meaning the worst areas, and that's New York City, that's New Jersey, even Puerto Rico. I was surprised to see that in South Carolina, but places like Florida, Ohio, Montana, Arizona are green. I mean, there is a whole lot of this country that is not seriously infected. In fact, 25% of the counties in America are not infected. They have zero cases, zero cases. And that's why we have to get this country open again. We have to do it. We have to do it. All right. The latest number of deaths just at 31,000. And that's a lot, folks. But last year, we lost 42,000 in automobile accidents. And my point here is, did we change our driving habits because there were 42,000 deaths from auto accidents? I didn't. And do I know that every time I'm going out there, I risk being one of those statistics? Yes, I do. But I have a pretty good idea what I need to do to avoid being one of those statistics. And we're going to see developed over the next month or two what these risk parameters are, and I will be right on top of it and give you those every Thursday night as to defining a level of risk. And when you're investing, obviously we have to measure risk in many different ways. But we are measuring risk now as far as how much can we do in society without a recurrence happening in this pandemic. If you look at history, and just in our lifetime, for instance, the avian flu killed 1.1 million people in 1957. So I was 2 years old at the time. The Hong Kong flu, 1 million in 1968. SARS, just under 1 million. The swine flu, 200,000. COVID-19 is about at 129 right now, and already the peak has been hit. There are no places on the globe that I know of that are reporting increasing cases. So if you want, you'll get the slides on this. If we've got your email address, you're on our mailing list. We don't, bug you about anything other than to send you the slides and the data that I'm looking at. But the bubonic plague was, 300 million people. This is bad what we're going through right now, but there is precedent for humanity fully recovering from this. To give you a perspective, for the 35,000 deaths that we've got right now, that's equal to strokes. That's equal to strokes in 2017. Cancer in 2019 is like 250,000. Heart disease, 275,000. So this is bad, but it didn't shut down all of society, these statistics that I'm giving you, all right? So I don't want to spend much time on this next area because the whole controversy now with President Trump canceling the funding for WHO and whether that's the right thing to do. I will tell you that 25 cents on a dollar of the funding for the World Health Organization is coming from the United States, and I don't think WHO served us well at all during this pandemic. So something's going to happen here. This is going to play out over time. I'll keep you in the loop on what happens, but that's what's going on right now. 25%, and who knows where they're going to make up for that when they lose the U.S. funding. So far, in the last decade, we have generated, and that's under two administrations, right? It's not just Trump. Obama and Trump. 25 million jobs. 23.5 million jobs have been wiped out in a month. Take that in. 25 million jobs generated since 2010, February 1st, 2010. And 22 to 23 million, stats are still developing, have been wiped out in 1 month. In 1 month. And that's not from the disease. That's from the cure. And that's why it is so important that we get America back open again. California claiming 2.2 million jobless losses. Pennsylvania, Michigan, these are all like 750,000. All the areas where the massive job losses are big population areas where the outbreak is. Remember what I said earlier. 25% of America doesn't have a single case. 25% of the counties in America. So what's the future? Well, cost is not going to be the driving factor anymore. 95% of America's pharmaceuticals have been produced overseas, and that will never last. I would bet within a year, certainly 2 years, you're going to see double-digit reductions in pulling those companies by their choice, not by government mandate, coming back to America so that our supply chain is here so that we are not having to send the New England Patriots jet over to China to bring N95 masks to America. That's crazy. Made in America won't be a slogan. It's going to be a congressional mandate in many industries. Not everyone, but in many industries. This recession will show a V-shaped recovery when we have a treatment, consistent testing, and a vaccine. And then you're going to see this economy massively take off and resume the upward trajectory that it had before all this happened. I'm going to pause for a second, see if we got any comments, see if we got any questions before we move on to the U.S. economic data. I'm going to publish my third poll here, guys. When should we reopen? The first answer is now. 22 million job losses is enough. Or open by county on a per local basis. In other words, not mandated by the federal government, but on a per county basis. Stay closed for another month, I should say, and then stay closed until further notice. What's your choice on that? Let's vote on that, and then I'll move forward. All right. Questions, anybody? No response on when we should reopen. Now? Stay closed for another month. Stay closed until further notice. Any questions in the chat here? All right. I like that. Open by county per local law. That's my vote too. Further notice, that's equal to it, 43%. I think that's kind of risky, guys. I don't want the cure to be worse than the disease. But we will see how it plays out. Give you another few seconds. We're going to go into the economic data here, and I'm going to tell you about the great chart on my left-hand side. On the left-hand side of my screen here, but I'm watching in real time. All right, here are the results. We got 38 and 38%, one for county, one for staying closed until further notice. Yeah, well, we'll see what happens. We'll see what happens. So on the economic front, I know it seems like the market's having a terrible time and everywhere you look there's carnage, but here's the reality. The NASDAQ is down less than 5%. The NASDAQ is down less than 5% for the year as of this afternoon, and even less than that now, because on my screen over here are the Asian markets, and the U.S. small cap index is limit up. Now, what does that mean? That means that it trades up to being 5% higher than the close this afternoon, because obviously it's Friday in Asia, and they shut the market down because the market is so high that they won't let it trade anymore. I literally was just on a call with a client this afternoon and said, small caps are so beaten down, there's no way we're going into them anytime soon. And this doesn't make me think I was wrong. What it says to me is that small business America loved what they saw on this press conference today. And that was enough to build enough confidence that that area of the market, that asset class, is limit up. May not last, but folks, that's the best I've seen small caps. NASDAQ down less than 5, S&P down 13 for the year, Dow Jones down 17, the Russell's down 30% for the year. So it is time for a comeback. Okay. My worry is that opening up the businesses will allow for mass spread again. You know what? I hear you, Chris, on that. These guidelines that I've seen just a little bit there, I think there's a real good chance that they have thought this through and that a second round like happened in the 1918 Spanish flu is not going to happen. I get it, a random grocery store, massive outbreak, and we'll see. We may have built up some herd mentality by then. Don't know that. We'll find out. GDP, gross domestic product, throughout the world is looking to take a hit in every region of the world. The U.S. is expected to be down 8% in this quarter, the next 2 quarters, I should say, but to finish slightly positive. And I think that's obviously a positive for us. We're not going to have the growth we could have had, but it depends. We have a real good sign here, but the market has been waiting for some announcement on the reopening, and they got it today. The carnage in jobs that I mentioned earlier, the 25 million jobs that have been lost in just the last month to 5 weeks, is not across the spectrum. Yes, clothing stores, auto dealers, furniture, bars and restaurants. Actually worse in clothing stores than bars and restaurants. I guess that's because we've become a pajama society, right? Building materials, but online traffic, health stores, grocery stores obviously have seen a gargantuan boost. So the downturn is not across the spectrum. Normal unemployment, a Thursday unemployment number is maybe minus 200,000 to 225,000. 4 weeks ago, we saw this huge 3.2 million. 3 weeks ago, 6.4 million. Last week, 6.3 million. And today, it was down to only 5 million. Down to only 5 million. These are crazy numbers. But again, the stock market is a forward-looking indicator, and what they see from what they heard tonight, they're not paying attention to this number that they heard just this morning. That's how fast this news is moving, folks, and why I'm so glad you're with us on these weekly broadcasts. Retail sales. So you've heard retail is down, right? Well, we know that. 1 month, in 1 month, retail sales dropped $46 billion in a month. In the entire 2008-2009 market crash, it dropped $49 billion over 16 months. That is an indication of the draconian effect of people dropping out and shutting down America. And we just can't keep doing it. Hey, Martha, welcome. Tell me about your Michigan governor. We're a little suspicious of your Michigan governor. We like Michigan, but your governor, maybe not so much. U.S. economic data. Discretionary spending has cratered. Why? Because we're spending money on groceries, on Lysol. I mean, all these companies like 3M and Procter & Gamble that never have seen, 16, 18% growth in a quarter, in a month, are now seeing that because all of a sudden they can't even make enough. They can't even make enough product there. Food stores, food services, I should say, which would be restaurants, down 26% in this latest data today. Clothing, I mentioned that, down 50%. Gasoline sales down 17%. Seems kind of paradoxical, doesn't it? That gasoline is like, I don't know, $1.10 here in Illinois. I hear out west in Montana, it's under $1 and nobody's going anywhere. It's just crazy. The portion of GDP, though, when we talk about retail, food services, and accommodations, which is hotels, it's not an enormous part of the U.S. economy. It's not enough to take it down. It's not like it's high tech. It's not like all the semiconductors in America blew up and we can't, do any computing. It's bad, and I don't want to minimize it. But these industries are going to be shaken out. It's going to bring some new players to the front, and some existing players are going to have to look at their business plans and see if it is stalwart enough to exist in the new America, which is going to be a little bit of social distancing for quite some time. We'll see what the medical advisors to the president are going to advise here, or what they're recommending when I get back to you next week and when they shake that out. So if you hear all the data that I'm telling you, you might think, well, aren't we in the middle of earnings season? Well, we are actually. And how could the first quarter earnings be anything but terrible? Well, actually, by this time in the reporting, and we're about 10% into the reporting season, 16 days into April, and this reporting season goes all the way to June. We still have 68% of the companies beating their expectations. And remember, they gave this recommendation or this advice in December. In December of last year, they didn't know about this virus. So we're still at 68%. Now, that's lower than normal. Normally, it's about 78. Corporations tend to set the bar low so they can, surprise, we beat earnings. All right. But this is still a really good number. The consumer is what drives GDP. And that's what is the concern here, is that if the consumer is too scared to spend, then who's going to do the spending? Is it going to be businesses or is it going to be the government? Well, the government has pitched in to some extent, but it's not really going to be enough because the consumer throughout the world economy is what drives gross domestic product in each company. And certainly for the U.S. economy and the Chinese economy, which is primarily an export economy, we're primarily importing. We don't export that much, but our importing is only about 17%. I mean, we don't rely that heavily on receiving goods from other countries, not nearly as much as China relies on exporting. In fact, on the chart I'm looking at, we're way less than Japan, the UK, Germany. So we have some filter from that, all right, which is a positive. Before I leave this section on economics, let me just check the questions here. Prohibits purchasing clothes. Yeah, thanks, Martha. I've heard the crazy things going on up in Michigan. It's hard for me to keep track of every state, but really, what are they going to do? Arrest you if they see you've got a new dress with a little tag hanging on it? It's crazy. Symptomatic and phrasal. It's tyranny here, Charlie. She's awful. Well, you're just concurring, Martha, with what we've heard about. And we're a sister Midwestern state here. I don't know what it's going to amount to, but it's crazy. And, you know, these governors are all pooling together here. If you're in Illinois, we're not a big fan of Pritzker either, but if they all get together and decide to extend those opening dates, the president may jump in and just say, you're not going to do that. We're going to tell people they have permission to do what they want to do, and if you hassle them, it's going to the Supreme Court. So that's why we're doing these every week, folks, because we just hardly know from day to day what new news is going to come out. I want to give you a success story here. In the middle of hearing about all these layoffs and you know, consternation about when we're going to reopen, I have a buddy that works for a local manufacturer. It's called Duquesne Corporation. They're in St. Charles. I was buying Duquesne public address systems when I was in high school. They've been around a long time, and they make a lot of equipment, but they have retooled. Now, they didn't need President Trump to hit them with the War Powers Act. Their Czech Republic office started making thousands of masks, basically outfitting the whole Czech Republic from that office there. The St. Charles location itself, that plant has remained open throughout this pandemic, and thus their first quarter earnings were 30% higher year over year. In other words, first quarter of 20 versus first quarter of 19, due to the PPE, which is personal protection equipment that they're making. Now, their JR Automation is making extensive amounts of parts for General Electric. Why am I focusing on these guys? Because they're a relatively small company right here in Illinois, down the street for those of us that live here in Illinois. And they didn't need the president to step in. They just voluntarily said, look, we can retool, we can make this, we can deliver it at a cost that is more competitive than our biggest competitors. And that's a great thing. Okay, I got a question here. John, are the stocks, hey John, good to see you. Stocks gaining value during this time? Are we going to see a fall when the rest sees a rise? Not exactly sure what you mean. Stocks have been gaining value since March 23rd. March 23rd of this year was the low. On March 26th, the Dow Industrials went into a bull market. Now, you heard me correct. The bear market started in the 19th, 18th, somewhere there. It hit a low of March 23rd, and the Dow turned to a bull market, meaning it rose 20% off the low of March 23rd and became a bull market. Just a few days later, the S&P and the Russell followed, and then just 3 days ago, the NASDAQ, all four major indices are now in a bull market. I think what you're asking, and thank you for this question, are we going to see a fall? Are we going to see it go back and test those lows? There's a lot of opinion on that, and I am in the camp that the low of March 23rd, with what's called the VIX index, which is it's a model. It's more than I can get into on this call, but it's a way to track hysteria or panic in the market. Hit an 82, which is the highest recorded level it's ever hit. I do not think we're going to go back and test that. Could we pull back from where we are right now? It certainly is possible. We certainly have a euphoria going on right now at this moment in the last hour and a half because of the press conference where the overseas markets have picked up on that and literally driven the Russell 2000, the small cap index, to limit up status. So good to see you. Thanks for joining. We got 2 Wisconsin people in here, at least that I know of. So anyway, what Duquesne has done that's been really special and unique for them is this ultrasonic welding technology that allows them to compete with Emerson and 3M and some really big players like that. The first week in April was their best opening in years. The best opening week of the second quarter in years. Now, I don't have any stock in Duquesne. It's a private company. I'm just excited to tell you a local American success story that throughout all of this is making a difference and is making a difference in America's success. And that's exciting to me, and I thought you'd want to hear it. As I've just said, the bull market's officially over. It's not uncommon during earnings season to see stocks spike, especially if there's a surprise. Just a few slides ago, I relayed to you that the surprise factor was a little lower than it has been traditionally, but it's far higher than I expected it to be. So each week as I present these to you on Thursday night, I'm going to have that same data where you can see the percentage of companies that have reported and if they beat or if they met or if they lagged their earnings projections. I have a feeling more are going to either beat or match than what many people think. And for that reason, I'll go back to you, John, that I don't see us going back and testing those lows again. So I'm looking over here, and it looks like the Russell did come off of limit up, and yet now it went down and has come back up again. So there's definitely upward pressure on the markets right now, and that's a great thing. Let me get to another question. Gilead is helping the futures. Yes, that is true, Chris. And actually had earnings from Abbott Labs and Johnson & Johnson. I'll talk to you guys about that in a little bit because those were, different markets that we were looking at, different stocks we were looking at, and we actually purchased. So I got another poll here for you. See if you can see the poll on the screen there. Is now a good time to invest? IDK means I don't know. That's your job, meaning me. I remain fully invested. That's meaning you. I think some cash is wise. That's you. Or, hey, I'm mostly in cash for now. And we're probably going to have answers all over the board. I'll give this a few moments. In this third section, what I'm going to do is I'm going to talk about some of the trades we have made. And in the past, I've told you things we were thinking about buying. We've since bought them, and I'll give you some feedback on that. And actually going to talk about some things I missed, too. You got to be fair here because certainly we don't always have winners. So what do we have here? I'm mostly in cash for now. Okay. I'd be careful with that. I'd be careful because I am seeing a lot of bullishness after March 23rd. I really am. So this is good. We got 38% fully invested, 38% mostly in cash, 25%, that's your job. For those of you that are new to this broadcast, I have clients. I mean, that's what we do. We manage money for people, but I don't really mention that much in this broadcast because I'm here to educate you. But if you just found out about us through the internet, and we've had dozens of people join us based on getting references from other people or whatever, but we talk about what we do. Obviously, we run a family business. Alice and I have a 7-figure commitment to the programs that we invest in. All of our clients invest in those programs. Although everybody's in segregated accounts, this is not Bernie Madoff where the money gets pooled all in one place, obviously. But we direct those, and then we have these educational programs. Just you're just on here just wanting to learn something. That's great. We're glad to have you. We're glad to have you. What do we got here? The treatment is extremely promising. Yeah, yeah. I hear you on Gilead. I saw that earlier today. This is not something I saw. The leak showed tremendous success in the trial. 113 of 115 hospitalized patients discharged within 5 days. That gets a love there. Thank you, Chris. That is great news. I'm sure that that's also helping the market. So, guys, it looks like I remain fully invested wins it, but thank you for responding to that. Let's talk about what we've got going on. I think this is episode 6, right? And so episode 3, I mentioned that we were looking at Abbott and Johnson, Abbott Labs and Johnson & Johnson. We bought both of those. Abbott Labs gapped up 5% today. I mean, it's been a really good trade. Johnson & Johnson. These are both stocks we've owned in the past, went out of because healthcare kind of fell out of favor. But I was just seeing, and I'm mostly a technical trader. We can talk more specifics about that if you want one-on-one. But I was just seeing accumulation in those two stocks. And those of, I think, Abbott and Johnson, because one's for vaccine research and one's for immunization. You just can't really lose with these, and that's why we bought them. We've got a pretty good sized position. Johnson reported really good earnings on Tuesday, and Abbott reported today pretty impressive Q1. So we're going to hold those for a while. Yeah, Chris just mentioned that, and I didn't even see that, and I mentioned that the dividend was increased. I don't know how you increase the dividend. I mean, you got these oil companies reducing their dividends, right? But here this healthcare sector is increasing their dividends. That means if they're doing that, folks, they are really confident about their future, and that's where the money's got to flow. You don't just put the money in the market. Well, I hope that goes up. No, it's obviously well researched and everything. So I want to cover a couple misses here. Now, Walmart's a stock that we've held on and off for a decade, but because it's a staple, meaning it's not a discretionary, it's not sexy like Lululemon, where people got extra money and they go buy clothes and that sort of thing. It's a staple. Everybody goes to Walmart to get toilet paper when you can find it. We exited that because it was greatly underperforming peers in the discretionary sector, and now I'm waiting for a pullback. Well, I'm hoping it's going to pull back because I should have gotten into it earlier, and I didn't. We've had it before. We like the stock. A lot of these staples went from just ho-humming to just rocket ships. And so I missed that one. Another one that I missed, and this is, again, a company we've had for quite some time, on and off over the last 8 years. Netflix was just really underperforming. A lot of that was because Disney introduced their new service, and people were jumping all over that. And so, Netflix became the kind of ho-hum stepchild. But once it looked like Disney was having some issues, although it's not with their subscription, but it's overall Disney with their, and I'll get to this in just a second, with their open air attractions, really being able to ding their balance sheet, then Netflix looked like a little bit safer play. Not so much because Netflix is so superior to Disney streaming, but the other periphery of Disney, obviously a bigger company, had some risks. So I'm waiting for a pullback, and I'm thinking we'll be back into Netflix relatively soon. So Disney's theme parks remain closed. This is a stock that I mentioned just last episode 5. We got 43,000 workers furloughed since April 19th, which is, it's just starting April 19th. I'm sorry. It's just really bad. I mean, there's nobody coming to the parks. They got to, pay some of these, at least maintain the medical benefits. The one thing is that they have reopened Shanghai, but all guests have to wear masks, can only remove them if you're eating. So I just get this picture of, pull the mask down. It's kind of crazy. Visitors have to submit to a temperature check and present a government-controlled QR code on their phone that has proven that they are virus-free. Now, that's beyond what we're doing here in America. But you are going to see these kinds of checks and balances as these large-scale attractions open back up. And it has to happen that way. I mean, you're not going to get 100,000 people showing up to an Alabama Crimson Tide or, an NFL game unless these kinds of precautions are in place. Let me look over here at questions. Tom, after things settle down and the epidemic's behind us, what's your guess when the Dow might hit 3,000? It's just purely a guess, Tom. I think we go back to old highs this year. I don't think it's 2021. I think we have to get this full quarter of earnings out, and then, second quarter earnings, which comes out in the third quarter. So July and August is when we'll start seeing earnings from this period, because this quarter, April to June, is an entire quarter of COVID-19. Even though the peak, as I just said, was April 10th, that's what's crazy. We should be improving dramatically. We need to see the current earnings season and then the next earnings season. So that means sometime around October, if we've had 2 earnings seasons, I think, and especially, again, whether you like him or not, for the most part, I think Wall Street wants to see no changes. They don't want to be changing presidents, just like they didn't want to change them after 9/11. All that happened very early in George Bush's tenure. But I think it's relatively soon. I do. Disney owns ESPN, and they too are hurting. Very true. Thanks, Keith. I'm just waiting on Disney. I'm more kicking myself on Netflix and Walmart. Again, both great companies, and we'll be in them. We just got to wait a little bit. Thanks for the questions, guys. Another one that's in progress for me right now is GE. I was looking at GE versus Boeing, as far as an aviation play, because eventually we're going to start flying again. But the thing is that GE actually gets the majority of its earnings from services, where Boeing is just inextricably tied to the aviation industry. And GM's balance sheet is actually better than Boeing's right now, which is incredible because GE just recently was trading down with a 7 handle or an 8 handle. For those of you non-traders, that means $7 and something or $8 and something. It's been below 10. I don't know what it is right now. I won't type it in while I'm on the phone with you. And yes, the Russell is back to being limit up. So I'm sorry to be so excited about this, folks, but we got to open America. We've got to open America. I mean, this is what people get excited about in the markets when they see an asset class that's been beaten down for 2 years all of a sudden come to life. Limit up in Asia, because we've got a structure now to get this economy open again. Okay, it's great stuff. It's great stuff, and I want you to know about it. So this is where we are for tonight. We have a long history of rising from the ashes and being stronger than ever before. This is my phrase of the week. Fear is the polio of the soul, which prevents our walking by faith. Fear is the polio of the soul, which prevents our walking by faith. Now, you got to have faith. If you have faith in God, that's great. I'm a person of faith. A lot of people on this line are faith, but if you don't believe in that, that's fine. But you got to have faith in this economy, in the administration, in the medical experts, or else you'll just live in fear, and fear becomes a polio. It's just not the way to live. This program exists to encourage you, to give you honest data. If you guys, if you're not on our mailing list, shoot an email, cb3@cb3.com. We'll get you on the mailing list. We're not going to sell you anything. We don't have anything to sell. And we'll send you the slides that I use. Every source is corroborated. Every source is corroborated that we use here. This just came in today from Ray Dalio. Every time you confront something painful, you are at a potentially important juncture in your life. You can choose a healthy and painful truth or an unhealthy but comfortable delusion. For me, I choose the former. I'll take a healthy and painful truth rather than delusion of, I guess we'll be okay. You can't do that. It is my deeply held belief, as I finish the presentation every week, that we will not only survive this pandemic, but we will emerge a stronger nation. And for those of us investors, we will have a better and stronger and a market with opportunities we didn't even know existed just 2 months ago. Let me look at the questions. I try to keep this under an hour, and let me just make sure I've gotten everything. 56,000. Hey, Tommy, 46 cases of COVID as of today. Yes, I saw that. I skipped some data, but we've crossed over 500,000 in the U.S. It's a bunch. It's a bunch. I understand, but we are on the downturn. We do. We're ready. You bet. Thank you, Martha. Thanks for that enthusiasm. Johnson & Johnson already in mass production of the vaccine. Yes, even without approval. Well, because you can't. You're just taking a chance. You're going to produce the vaccine. You imagine getting approval, and I guess we'll crank this out now. And then 9 months goes by. You can't do that. Assuming it'll be streamlined and accepted by January, expects to have 800 million doses. You've been doing your research, Chris. Thank you. By early 2021. It's data like this that gets market participants excited. You hear about leading indicators and lagging indicators. The stock market is a leading indicator. Why? Because it's not looking at what's happening today. So many people will tell me, how could this, when all this is going on, why is the market going up? Why is the market limit up tonight? We're still in the bowels of this. Thousands of people are still dying because the market has already discounted that news. It did that way back in March. Actually, it did it in late February. Now, is that right? I can't tell you that. That's just the way the market behaves, and it's our job as portfolio managers and, frankly, educators for our viewers to see what's happening, ascertain why it's happening, and to make the best educational choices for you and what I'm telling you here, and investment choices for our clients. That's just what our job is. It's just what we have to do. Well, guys, I'm right at 45 minutes. Let me take one last look in here. My two stores, so Keith, Jewel, and Aldi's have 0 people infected over the last 5 weeks. That's awesome. Thank them for being open, and I asked them about their health. Yeah, we got to encourage. I want to just, thanks for sharing that, Keith. We've had some pizza delivered, and like 2 or 3 episodes ago, I asked, would you have a pizza delivered? Would you have somebody bring you Chinese carry out? And some people are going, no, I don't want any carry out. Well, I'm not going to go back to that because it was a really interesting poll. You can go back to episode 3 and watch that if you want. But I'm just going to encourage you to tip. I mean, we're like doubling our tips for these grocery. If you shop with Instacart, wherever you are around the country, you've got Instacart, and it ties into your local grocery stores. If they default and put like a $4 tip, bump it to 10. I mean, yeah, that's a lot. But these people are on the front line, and they're not making that much money anyway. But they're making it possible for an old guy like me who is more at risk. You guys know from episode 1 up to the current right now that men, I'm 65, are more susceptible to getting this disease than women. 70% of the deaths from COVID-19 are for men 60 and above. So when someone like a grocery delivery person, this one woman came in with a teenage son, she said, it's helping me out. They're wearing masks. They got gloves on. Let's just say thanks to them. That's all. That's just my little soapbox there. What else do I have here? Bob Hardman. Hey, Bob. Thanks, buddy. Good to see you. One of my classmates. Bob and I have known each other for, let's see, we were in 8th grade, Mr. Smith's band, right? So that's like 51 years. Holy cow. Tom, thank you. Thomas, appreciate that. See you next week. Appreciate it. Stay healthy up there in Wisconsin, my friend. We got people in 4 time zones tonight. We got people from Oregon, Boston, Atlanta, South Florida, Texas, Montana. Yeah, so anything else, guys? We're winding down. Anything else, question-wise? Again, if you want the slides, just make sure we have your email address. I send the slides out on Fridays. I'll do that tomorrow. CB3, that's Charlie Bravo number 3, CB3@cb3.com. We'll add you to the list. The only thing you'll be getting is just notices when I do one of these broadcasts. We have nothing to sell you. And I'd appreciate it if you'd like our page. So if you, like what I'm doing here, just hit like, tell your friends and family. We'd be glad to talk to people if they got questions, concerns about what's going on in the market. I talk to 3 or 4 people a day, usually 5 to 6, 7 every week. And they're not all clients. They're just people that are watching the show and saying, hey, tell me what's going on. So I think we're going to wrap, guys. Any more questions? Going on. So next week we're going to talk about what I just started on over here, and that's these new phases, phase 1, 2, and 3 on getting America back to work. It's called the Core State Preparedness and Responsibilities Act. We'll see if it's still called that next week, because that acronym is kind of ugly. But reopening America is what's at the forefront of our minds right now, and obviously investing and watching for the new leaders. It's a new America. And I'm real excited myself because I know that we're going to see new innovations, new ideas that we had no idea were even in the pipeline just 2 months ago. Not 2 years, 2 months ago. So guys, thank you. You mean the world to me by checking in here and watching. Stay healthy, and we will see you a week from tonight.